Well, good afternoon. My name is Eric Levinson, Head of Business Development here at VinaCapital, and I'm joined by Andy Ho, Chief Investment Officer of VinaCapital, and Michael Kokolari, our Chief Economist. And this afternoon, we're going to introduce the VOF, Vietnam Opportunity Fund, to the group here. We're going to have 20 minutes of kind of a conversation here, and then we'll go to question and answer for about 10 minutes. So thank you so much for joining us. Andy, you know, some folks on the line may be familiar with VinaCapital, but there's probably some people that are not. Kind of introduce VinaCapital to the audience.
Thanks, Eric. Yes, VinaCapital, we've been around since 2003. Today we manage about $3.5 billion of capital, half of which is in the traditional asset management space, like public equity and fixed income. The other half is in what we call the alternative asset space, including venture capital, energy, as well as VOF, which focuses primarily on private equity types of investment.
Interesting. Now your story is also unique. You're Viet Q. You can explain what that means to the group. You work with Michael Dell at Dell Ventures. You have an MBA from MIT, which is probably unique here in Vietnam. What's your story? How long have you been in Vietnam, and why did you come here?
Yeah, thanks, Eric. Viet Q is a terminology meant for folks that have spent most of their lives outside the country, which I have. I've spent most of my life in the United States, and as well as Don Lam, the CEO. He's spent most of his life in Canada as well, and we've been enamored by Vietnam, its growth story. I came back in 2004, so that's been over 15 years, and I think the growth has been tremendous. And I think the next 15 years will be even better. Being that I am Vietnamese, with the experience and the background that I have, it made a lot of sense for both Don and myself to be part of the Vietnam story.
Yeah, and in fact, so your experience is unique, and I just learned, as we talked about during the prep, you're also now a published author. And what is your book about?
Yeah, I've been asked to share some thoughts as to how to make successful investments in Vietnam. The name of the book is called Crossing the Street. It will be published any day now, okay. And through the folks in London, Harriman's publishing house. And so the idea is to share with the audience and share with the readers what are the challenges of investing in Vietnam, and how do you navigate some of these challenges to make successful investments out of it.
Interesting. So hopefully we'll cover some of that stuff in the next 20 minutes. And so as you think about VOF, VOF is a London-listed portfolio, a FTSE 250 company, has a very unique approach. You talk about having a private equity approach to public equities. What exactly do you mean by that?
Yeah, I think what the approach that VOF executes in terms of investment allows us to deploy large amounts of money. Today, anywhere between $30 to $40 to $50 million at a time. We're able to have much higher visibility into the business because we ask to have due diligence rights into the business, whether the financials, legal, or ESG. We also ask for investment terms, mostly minority protections, terms that allow us to participate at the board level or at the managerial level. And most importantly, terms to commit the sponsor to taking the company either public over the next 3 to 5 years, or through a trade sales in the coming years. So effectively what we do is we take a private investment approach to companies that we believe can either go public in a 3 to 5 year time frame, such as Hoa Phat, one of the largest steel companies in Vietnam. Us taking some of these companies to a trade sale, which we sold a large vodka company to Diageo not too long ago.
Interesting. So let me turn it over to Michael. We'll come back to you, Andy, as the portfolio manager. So Michael, you've been working in Asia for over 20 years, been an economist in Vietnam for over 10 years. Now Vietnam, for those of you who are familiar with the story, has managed COVID extremely well. Vietnam actually had positive GDP growth last year of a little over 2%. What does the economy look like today, and what are you forecasting for the next kind of 12 to 24 months?
Yeah, we're having another really strong year here. I'm expecting GDP growth of 6.5%, maybe a bit more than 6.5%, and it's not because of base effects, because as you mentioned, last year was relatively strong. There's really two key drivers that are supporting the economy, and the first is the consumption, because as you just mentioned, the government has really handled COVID very well without impeding the economy. So consumption is growing at almost double-digit pace this year, which is, amazing, and again, not based on base effects. And then the other thing is that Vietnam is manufacturing and exporting a lot of products that have become to be known as so-called stay-at-home goods, so things that people need to work and stay at home. televisions, laptops, things of this nature.
So another thing that people were talking about last year, and maybe talk about if it's a longer lasting impact, is this whole China plus one strategy, or looking at their supply chains. And is Vietnam a beneficiary from FDI companies diversifying their manufacturing base?
Yeah, this has been, the story had actually started already a few years ago with the trade war, and then the COVID really accelerated it. Vietnam's exports to the US this year are up, so far up 50% as part of this story. But probably the more interesting, important aspect of this is the build out of local supply chains to supply those FDI companies. And I think this is going to be the story in this country for probably the next 10 years.
Yeah. And one last question for you is that, when people look in Vietnam as a frontier market, one of the questions tends to be, what about the currency? And so that can be, and has been historically, an issue. What's your view on the Vietnamese dong and kind of the past and the future?
Sure. Well, probably a lot of the viewers will know that in 2015 there was a lot of turbulence with the Chinese currency and Asia in general, and at that time the Vietnamese authorities really put a lot of macroprudential regulations and things of this nature in place that have really been very effective to stabilize the currency throughout the COVID and everything. But because the trade surplus is so huge, because there's so much investment flows coming into the country every year, I actually expect that we'll start appreciating by about 2 to 3% annually going forward for probably the next 5, 6, 7 years.
Yeah, and so the last couple of years, it's actually been quite stable
Very
as well.
stable, yeah.
And now you actually think you'll see some growth.
That's right, yeah.
Interesting. So Andy, back to you. You mentioned Hua Fat, but I think the people want to say, okay, so we had a positive GDP growth last year. Michael's suggesting kind of 6.5%, maybe 7% in 2021. What does that mean for the portfolio? What are you looking at today with that as a foundation?
Yeah, I think Mike's right. We do expect a very strong growth in the economy in the next 3 to 5 years. And that means a few things for us. One is our strategy in terms of looking for great companies has not changed. The sectors that we focus on has not changed. And the sectors we focus on are primarily those that benefit from the growth of the domestic economy. With GDP growing 6 or 7% per annum, it means the people are getting wealthier and wealthier. That means they're going to spend money on consumer goods, financial products, education, healthcare, the basic sectors that benefit from the growth of the domestic economy. And further to that, because of the trade war with China, we are seeing a lot of FDI, of multinationals, migrate some of their manufacturing base to Vietnam, this is great for the logistics space, infrastructure space as well. So that's some additional assets that we may look into as far as investing is concerned.
Yeah, and so in Vietnam, people talk about kind of these big demographic trends. It's a country with roughly 97 million people, 2/3 under 35. And then an urbanization rate, people leaving kind of the suburbs or rural community into the cities at about 37% a year. So as you think about those as the demographic trends, are there any specific deals that you're looking at or you've closed recently that kind of express your investment philosophy?
Sure. Recently, we closed $40 million investments into the largest primary real estate primary brokerage business in Vietnam. The market value is about $500 million. It's a private deal. We hope the company will go public sometime later this year. It is a reflection of the fact that we believe the individuals are getting wealthier. Their GDP per capita is around $2,500 to $3,500 per annum. These folks will need to buy homes. This company is the largest primary broker in Vietnam. They help real estate developers sell the apartments to individuals that are looking for homes. And these individuals are buying homes in the outer skirts of the city, and these folks are the largest player in this space.
Yeah, and it's interesting that the numbers, the 2,500 to 3,500, it's actually much higher than that in the cities. And then interestingly enough, that kind of $3,500 GDP per capita has historically been when kind of consumption has taken off in other frontier and emerging markets. Also, I think $40 million at a 500 million multiple kind of is also kind of, when we talk about your philosophy, you tend to want significant but minority stakes. Do you agree with that as well?
That's right. We are taking a significant minority stake in this business. We do have terms of investments with the sponsor and the business as well. and we have a high level of visibility into the board activity as well as the management's activities of the business as well.
Okay. Now, we talk about the fund having a private equity approach to public equity. Earlier in the conversation, you mentioned VOF, which is a public company, but a lot of people may not know if they look at the fact sheet. It's the number one holding, but they may not know the whole story about when you invested. So maybe walk us through the investment in VOF, how long ago you bought it, why you still own it, and kind of that journey as a representative of looking at how the team manages money.
Yeah, VOF, it's a great case study for VOF and VinaCapital in general. We invested in this business around late 2007, early 2008 timeframe. We put about $50 million into this steel company. They were importing scrap metals, and they were buzzing it down and creating construction steel out of it. Our investment allowed them to invest in a fully integrated steel complex, which means that they were producing steel. They would be producing steel from iron and coke. And as a result of our investment, they were able to do a fully integrated steel complex and produce steel at a significant discount to their competitors, those that were importing scrap metal. So at the time, we invested in the business. It was slightly less than $500 million in value. Today, VinaCapital is the largest steel company in Vietnam. It is expected to deliver over $1.2 billion in profit after tax this year. That's a growth of over 100% in EPS growth for 2021. They recently introduced total capacity of 8 million tons per annum in 2020. That's why they're able to deliver such a high level of profit for 2021. Their market cap is $9 billion in value. Remember, we invested when it's less than $500 million in value. Today it's $9 billion in value. And it is a company that's producing products and goods that caters to the spending of the government, infrastructure spending, as well as the spending by property developers building up buildings so that individuals who are getting wealthier and wealthier can buy apartments. Yeah. So it's a play on the growing economy as well as a play on the fact that the government wants to spend a lot of money on developing and investing on the infrastructure of Vietnam.
Yeah, and I think as we think about it, it's also a credit to their management. It's not simply about a rise in commodity prices or even a rise in just demand. I think when you entered the company, it was the 11th largest steel company. Yes. It's now the largest. So it went from 11th to first. It's not like every other company had the same trajectory. So as much as it's getting the beta right, you still have to pick the right company.
That's right. And the key was understanding the barriers of entry. Yeah. For those that were producing steel. And the barriers of entry was a large investment, but a very determined group of leaders who want to produce steel from A to Z through a fully integrated steel complex. That is not an easy endeavor. Not only does it require capital, but it requires a significant amount of technical skills to be able to do it on a large scale.
Yeah. Now, to give the audience maybe a feel for just the way the portfolio looks, I think I don't want to say it's easy to talk about VinaCapital, but it's certainly a great story. Owned it for 14 years. Maybe give another example of another company that's maybe been in the portfolio for a while in kind of the journey, because not every journey is that successful, but it's still successful.
Yeah, we've been very fortunate. The economy has been growing well. Most of our investments have been quite successful. Another example is the largest jewelry company in Vietnam called P&J. We invested when they were private, and subsequent to our investment, they've gone public. Today, they are the largest jewelry company on the stock market today. As you can see, the theme of our investment is that we would take private investments. We would take a private equity approach or an investment into these private businesses before they go public, and help them to grow to the next phase and take them public, and then hold them in our portfolio as a public entity. So some people look at it, well, VOF has 60-70% exposed to the public equity market. Is it really a private equity fund? It is, because our entry into these businesses are private equity. We take large stakes and we have high visibility around the business as well as its management. So over the years, we've been able to take P&J onto the market, and this year, I'm hoping this year, P&J will cross the $1 billion market cap mark. We're very proud to say that we've been a part of at least 20 companies that crossed the $1 billion market cap mark over the last 10 years. And VinaCapital will be the second company in Vietnam to deliver over $1 billion of profit after tax.
Nice.
Okay, so this year we hope the largest jewelry company will cross the $1 billion mark. Earlier this year, our investment in OCB Bank, what we made about 3 years ago, crossed the $1 billion mark. They listed on the stock market early part of this year and crossed the $1 billion mark.
Interesting. And so as we think about what the portfolio looks like, I think, maybe like you addressed two things. One, do we have a competitive advantage? Because there are other portfolios that invest in Vietnam by firms that are based in Singapore or Hong Kong or other places. What is the advantage to being in Vietnam? And then the second part is, how many deals do you look at versus how many deals do you invest in? And I think for any private equity investor, that's always interesting.
Sure. I think Vietnam's opened up right now. So most folks from around the region or even the United States or Europe have access to Vietnam. And we have folks like KKR, TPG here, Warburg Pincus here. They're all partnering with us to do investments in Vietnam. So our unique strength in Vietnam is that we are Vietnamese. I am Vietnamese, Don's Vietnamese. We are having that conversation with the chairman and the CEOs of the companies, the raw conversation as to what are the challenges and how to grow the business. How do we help each other grow the next 5 to 10 years? And so I think that's our unique advantage. And I have to admit, a lot of folks, particularly in the leadership echelon, are still very weak at English. And so it requires folks like us that can navigate and be able to communicate well with them and appreciate their challenges in running the business. I think that's one of our unique selling points.
Yeah. And then in terms of deal flow, how many do you look at versus how many do you invest in?
Oh, each year we can look at anywhere between 100 to 200 opportunities. And we probably have about a 5% hit rate on the average when we look at these businesses. As time goes by, you can appreciate that these businesses are getting bigger and bigger. The opportunities are getting bigger as well. And so it also takes a lot more time to understand these businesses as we work with the Big Four to understand the financial side, the lawyers, and understand the legal side. So it takes time, it takes resources. So our investment rate is probably around 5%.
Interesting. Now, Michael, let me turn it back to you here. So as we think about the economy, we've got domestic consumption, we've got foreign direct investment. Are there any other themes that you see playing out in 2021 in terms of helping Vietnam with this continued growth?
Well, one of the things that Andy had alluded to is that the government is really pushing infrastructure development now. Last year, infrastructure development grew by about 35%, and it's around 6% of GDP. That obviously helps our steel investment. But in terms of allowing FDI to keep coming in the years going forward, the build out of the infrastructure and the logistics industry, this is really going to be fabulous for the country, I think.
Yeah, no. And as we think about the GDP growth, and if certainly those of us here, we're reading all the time what different folks are saying, but maybe people aren't as Vietnam focused as we are, your projection for that 6.5-7% GDP growth, that doesn't include a rebound in tourism.
That's right.
And so maybe mention how big tourism was as a percent of GDP and why that's relevant.
Yeah. Well, prior to COVID, foreign tourism was around 8% of GDP. Domestic tourism was around 4%. Now, obviously, foreign tourism has kind of completely evaporated. We think it probably is not going to come back for maybe another year and a half, 2 years. But what has happened is that the domestic tourism has actually taken up some of the slack, so it's made up some of the difference.
Interesting. Yeah, so our view is that tourism doesn't need to recover in order for Vietnam to continue with its strength. And Andy, last question for you before we open it up for questions. So the stock market was up last year in Vietnam about 15%. Year to date, it's up almost 15 or about 15 plus or minus. For people that haven't invested in Vietnam, did they miss it? What's the outlook? And kind of think about the valuations in the fund versus the valuations in the market, which I would suggest are actually still pretty attractive.
Yeah, I think Vietnam has still 10 to 15, at least 10 to 15 years of potential in the coming to go. Our valuation is relatively inexpensive compared to the region. We're trading at about 15 times forward PE for 2021. That's still a discount to the regional, roughly 10 to 20% discount. What's great about what's happening now is the liquidity, the daily trading average, the daily trading volume, if you will, in Vietnam has gone to almost $1 billion a day. About a year ago, we would be trading at about 150 to 250 million dollars a day. As you can see, the domestic participants as well as international participants have brought the trading volume up significantly, creating a lot of liquidity for the market. So now is a time where you can enter a market that's fairly liquid, that has potential to grow in the coming years on the back of a GDP growth about 6 to 7% and valuations that's relatively inexpensive. So factors are there to help investors pick and choose good companies in Vietnam to grow in the next few years.
Yeah, thank you. And the other thing I would share, and because some clients have brought this up with us, is that the appreciation of the stock market has actually been driven by earnings growth as opposed to simply PE expansion. Yes. And then the second part, if people look at the markets, we only have 1.5% of the market is actually technology. And so while a lot of the market, you look at what's going on in China, you look at what's going on in the US, is really driven by, whether it's FANG stocks or the like, here it's traditional, it's commodities, materials, it's financials in a big way. And so the actual makeup of the market is actually different. And so it's not just being driven by kind of hot tech money, so it's diversifying in that way. Well, that's I think our wrap on 20 minutes, and now we're going to turn it over to live Q&A, so we'll just wait for the first question. Thank you.
Thank you again to the team there. We're now joined in Ho Chi Minh City by left to right here, Mike Kokolari, who's the chief economist at VinaCapital, Andy Ho in the middle, who's the CIO, and Eric Levinson on the far right of your screens, who's the head of business development. I've just got a couple of questions for the team. The first of which is, what is the current COVID situation on the ground in Vietnam, and how is it impacting the investment outlook?
Yeah, thanks, David. At the moment, we recently had a recent outbreak, but it's not that bad. The situation is that we have less than 5,000 cases of COVID in Vietnam from the beginning until now. We've had less than 40 deaths. Most of the cases have occurred inside what we call government quarantine facilities, so they're not really in the community. But the government has taken a lot of caution. They have restricted movements in Hanoi for the moment. But that's generally it. They're being very cautious. As for the stock market and the rest of the economy, the stock market continues to do very, very well. But as you can imagine, some of the businesses, particularly in the service provision space or hospitality space, they have had to restrict a lot of their activities, particularly restaurants, have had to reduce the seating arrangement to maximum 20 people. And as a result, a lot of the businesses have slowed down because of the cautiousness that the government is taking at the moment. But in general, the market's very strong. It's trading at around $1 billion a day at the moment, 4 or 5 times that level 1 to 2 years ago. And so I think a lot of domestic investors are very excited about the stock market and have participated in a very large amount over the last few months.
Thanks, Andy. And on that front, private equity, where are you seeing opportunities?
Yeah, the private equity side, as you know, we define it quite broadly, but it is opportunities where we have the right to do due diligence. We negotiate terms of investments, minority protections, performance commitment, etc. And most importantly, we get to participate at the board level and the manager level to help the business grow. Applying this type of thinking, we are seeing quite a bit of opportunities. The size of the opportunities have gotten a lot bigger. As you know, late 2020, in December 2020, we deployed $90 million into a private equity investment. And so the opportunities we're seeing in the next 6 to 12 months is exciting. And as you also know, we are quite discriminate in terms of choosing the investment that we want to invest in, and particularly around management, our ability to trust management to deliver the business, the plan, and the strategy in the coming 3 to 5 years.
Thank you. Another question here: how is a more assertive China likely to impact Vietnam's growth opportunities over the medium term?
Mike?
Well, this is a topic that was covered. There's a very influential think tank in Washington, D.C. Called the Atlantic Council. Anyone that's interested in this topic, I really urge you to download. They have a 100-page strategy report giving advice to the U.S. government about this topic. Long story short, it really is in the U.S. interest now to help foster and bolster Vietnam's economic development, as well as the development of a few other countries in this region. And we really see clear evidence already that is the strategy that the U.S. is taking. U.S. is Vietnam's largest export market. Our exports to the U.S. are up already 50% this year. So basically what's happening is this is sort of pushing the U.S. and Vietnam closer together, which will definitely help foster our economic future development going into the future.
Thanks, Mike. Are all the major drivers of Vietnam's growth intact? FDI investment, demographics, middle class growth, etc.
I would say they're even more intact than what people realize.
The story is still there. Last year, Vietnam's FDI inflows didn't budge at all. FDI in the world was down 40% last year. Ours didn't change at all, still 7% of GDP. Everything with demographics, et cetera, still looks fabulous. However, the story that a lot of people have not really realized yet is you're just now starting to see the build out of the local supply chains in Vietnam, of local Vietnamese companies that can help supply those FDI manufacturers with inputs for the products that they export. This is the same thing that happened in Singapore and Thailand. This is a story that's been repeated over and over. I think that's going to be one of the biggest economic drivers for this country over the next 5 to 10 years. So far, not a lot of people are talking about that, but I think this is a very important thing for people to know about.
Thanks, Mike. A question from the West Country here in England. What is the current political position? Is it stable and sustainable?
Yeah, the current political system is stable. We at the beginning of 2020, Vietnam promoted the new leadership for the next 5 years. In terms of policy, we don't see a whole lot of changes in terms of the policy, particularly around economic policy, and in terms of promoting growth through FDI as well as FII. But I think the challenge for Vietnam in the next 5 years is that because they want to promote FDI and all the manufacturing coming to Vietnam, Vietnam will have to invest a lot more on the infrastructure front, as well as provide more trained labor, the labor force.
Thanks, Andy. Probably time for 2 more questions here. The first here, what exposure does the trust, the company, have to Belt and Road, and what opportunities and risks does this offer the Vietnam market?
The VOF in Vietnam, in large, I would say, is not exposed to the China Belt and Road Initiative. So at the moment, we don't see any sort of impact directly. I suppose on the indirect front, if folks are, like Mike was saying, if the United States is getting closer to China, to Vietnam, if the United States is getting close to Vietnam and manufacturing is migrating a lot of their businesses to Vietnam, we have to invest on infrastructure and the labor force.
And final question, does the team invest alongside the state in state-owned enterprises? And what are your views on that in Vietnam?
At the moment, we do not invest alongside the state and the state enterprises. We do look at SOEs or state-owned enterprises that are going through the equitization process. So we would invest directly into the state-owned enterprises that are going through the equitization or effectively privatization exercise. And as you know, the privatization activity was quite vibrant from 2005 to 2010. It has slowed down significantly over the last couple of years, but there's only about 2,000 or 3,000 companies left. The original list was about 14,000 to 15,000 SOEs, and I think in the next few years, the government will continue to equitize the remaining 2,000 to 3,000 large companies, if you will.